Hello traders, today's video is going to be about divergence. Now, divergence is a very powerful concept, and if you as a trader are aware of this, it's going to really help you in your trading decisions. So I'm going to go through charts today, and we're going to see now divergence occurs on all time frames. Divergence is very powerful. The more powerful a divergence, then it's usually going to be on a higher time frame. Okay, so that means when you see divergence on the monthly chart, weekly, daily, 4 hour, it's very powerful. Now that's not to say that it's not powerful on the 1 hour chart or 30 minutes, but I'm trying to tell you in terms of peepage. If you were to see divergence on the 4 hour chart, the daily chart, the weekly chart, then you get a lot more pips. So why is divergence so powerful? Because divergence actually reverses price action. So you can actually see it as a reversal pattern as well. And it's important to us as wave traders because I've observed that usually before you see what you call a 1, 2, 3 bottom or a wave bottom or the start of an Elliott wave, either bullish or bearish wave, you usually will have divergence situations preceding them. This is why divergence is so powerful and important for us to know. And once you see them, it becomes easier to see them. And this helps you because whenever you see a divergence situation forming, then you know that you have a potential trade situation in terms of a wave top or a wave bottom setting up. So it's actually important for you to know this, and it will not take you too long to really begin to take note of it. So I'm just going to show you how to find divergence here. And before I go on, I want you to know that actually there are about 3 types of divergence. The first one is called negative divergence, and negative divergence pushes price down. The second is called positive divergence, and this pushes price up. Okay, the third one is called hidden divergence, and this actually continues what price does. So I'm not going to discuss that. If you want to know about hidden divergence, I will recommend you go to, well, you can go through the internet and just Google hidden divergence, and you are going to see so many articles about that. But I think I will recommend Baby Pips for you for that, because they have a beautiful article that talks about divergence, and I think I recommend that for everyone. But here we are going to talk about negative and positive divergence. Okay, so these 2 types of divergence can occur on they usually occur at the top of a trend or at the bottom of a trend, and they create reversal situations. Now, they do occur in the middle of a trend, but I think I want you to concentrate more on the fact that they reverse trend direction. Okay, so let's get into this now. If you want to locate divergence, with practice you do not need any indicators. But if you are just starting out, I would recommend that you use the MACD, that is the moving average convergence divergence indicator, which is here, or you use the stochastic. The stochastic is beautiful. This one, the stochastic oscillator indicator, is beautiful for locating divergence situations. I do not use stochastic to trade, but if you are having difficulty locating divergence situations with the MACD, I recommend you put your stochastic indicator on just to teach you how to find them. Once you are used to finding the divergence situations, you don't even need indicators to see them. So let's get into this. I'm going to show you by example how to locate divergence situations. So this is the monthly time frame for the dollar index. Okay, so I'm going to walk you through from the monthly probably down to 1 hour, and you will see that divergence situation occurs on all time frames, even on the 1 minute. But we're not going to go as low as the 1 minute. We might probably stop at 1 hour. It's not necessary. The main thing is for you to recognize it. So now this is the dollar index. I'm on the monthly time frame, and at a glance I can see an incidence of divergence here, an incidence of divergence here, another incidence here, another incidence here, okay, and one here as well. So there's also one here as well. So you can see how easily I'm seeing them. Now you may not know what divergence means, so let me see if I can explain it. So Divergence, actually, when you relate it to something like an indicator, means that the indicator is going in a direction and price is going in the opposite direction. Now, essentially, there are two types of indicators that traders use. Some are called lagging indicators. Okay, so they lag behind price, and MACD is one of them. And others are called leading indicators. Okay, and it's almost as if they go ahead of price. So, when you have a lagging indicator like MACD, which follows price action, begin to do something opposite what price is saying, then you should know that a possible divergence situation is in the works. So let's make an example. Let's use the most visible one here. For instance, I'm going to show you. You can see here when the market created a low point here and went up. Okay, created another low point here. Now, MACD essentially is supposed to follow what price is doing by creating a valley, and then creating a lower valley. But in this particular instance here, I want you to notice the valley of MACD. So I'm going to use lines to depict this. So you use lines to see divergence. Now, if we were to draw a line from this low here to the second low, and then we draw a line beneath the MACD line, okay, like so. Did you notice that while this line is going in this direction, the MACD line is going in the opposite direction? Okay, so this is how you locate divergence, and you can see that this movement here, price pushed up. Now, because this is divergence, this is called positive divergence. It's in the middle of this chart, and this is why after the price moved up, the overall trend still prevailed and it came down. Let's look at another example of positive divergence. We can see here that we had a low in price here, and then if we connect that to this low here in price, you can see that MACD created two valleys. The first one followed price action like so, and the second one, instead of going lower just like price went lower, it went higher. So if we were to draw a line from this valley to the next valley, you will see that we have a divergence situation, and this is why they call it moving average convergence divergence indicator, because it actually helps you to notice when there is a divergence situation between the indicator and price. So you can see here that we had a low here and a much higher low here, but in MACD we had a low here and a higher low here. So by drawing these lines, you are able to see a divergence situation, and you can see that this pushed the market up. Okay, and now after the market was pushed up and we got this correction, do you see that we now have what we call a 1, 2, 3 bottom, or what I call a wave bottom situation? We actually have another incidence of divergence here as well. You can see here we have a low, and here is a higher low. So if we were to draw a line from this low to this low, you can see it yourself. And if we were to draw a line from this valley of MACD here to the next valley, you can see that we have another divergence situation, and this is what has pushed the price up to this level. Now, when the market went down a little bit again, you can see we now have what I usually call a wave bottom situation, meaning this is 1, 2, and 3, and you can see price pushed up consequently. Okay, so now so this means we have an incidence of positive divergence here, another incidence of positive divergence here, another incidence of positive divergence here. Now, if you check carefully, you will see that you are seeing a pattern. This tells you excuse me, this tells you that positive divergence situations usually occur at the bottom of a downtrend, and this often causes reversal situations. Okay, so now this is an incidence of another divergence situation here. This is called negative divergence, and negative divergence pushes price down. So let me just show you that. So in this instance, you have a high point here, and you can project that to the last highest point. Okay, so you can see that this is the opposite of what we have here. And then when you go down to MACD, you will see that MACD created a peak here and then a much lower peak here. So by drawing the line like so, you will observe that we have another situation of divergence. This is called negative divergence, and you can see that it pushed the price down. And let me just make this chart bigger. And if you are very observant, you will notice that we had another incidence of positive divergence here. We had a low point here, we had a higher low point here. So if we connect the two of them like so, and we go down, now you are not going to see it on MACD as such, but if you look carefully at the histogram, you will notice that the histogram has the divergence situation occurring, because we have this low point here and a much higher low point here, and you can see that it's diverging to price. Okay, and that is what has pushed the price up to where we are currently on the dollar index. So I hope that you are following me so far. Okay, so I'm just going to delete the lines here. Now we just did it with MACD. Let us do it now with the stochastic indicator, and let me show you how the stochastic indicator shows us divergence situations. Okay, so I'm not going to change any settings here. You can if you want to, but I'm just going to leave it as is so you understand what I'm saying. So I thought I deleted MACD. I'm just going to delete that now. All right. So you can see here we have the stochastic indicator. So now let us review again what I just did. This time around I'm going to be much faster. By the way, there's an incidence of divergence here which I forgot to mention. You can see here, okay, you can see a higher peak here and a much lower peak, and you can see that we actually had a wave top situation, or a 1 2 3 situation, which has pushed the market down. So you see that if you do know how to look for divergence, or you know how to recognize them, that means that you actually have a potential wave top or wave bottom situation, and you can see that this reversed the market. Okay, so that means that when the market is trending higher and higher or lower and lower, and you begin to see an incidence of negative or positive divergence forming, that should tell you that you are getting close to a top. All right, so you can see here we had the much higher high here than here, and if we go lower, you can see the stochastic indicator showing us divergence. Okay, so let's look at this one. So the first thing you do is, when you are looking for positive divergence situations, look for a low that is higher than the preceding low. If you are looking for a negative divergence, look for a high that is higher than the preceding high. Okay, I know that sounds funny, but that is how you observe this thing. So let's look at stochastic and see if we got we got divergence situation. Now we did not get it from here to here, but from here to here we had it. Okay, so let's look at the next one. Let's look at the bigger one here. Okay, so going down to stochastic, you can see that this valley here is much lower than this valley here. Okay, so let's look at another incidence again. So we'll look at this one here. We have a low point here and a much higher low point. So going down, you can see that we had a low point here and this place was higher. So you can see it. I hope that you are following. So let's look at another incidence of divergence. There's actually one here. It's very small, but you can see it as well. I think I'm just going to have to correct that. Okay, just you understand what I'm trying to do, and you can see that this point here. And now by the way, even if the valleys or the peaks of the indicators, they don't have to be higher than themselves or lower. Even if they are of the same exact height or the same exact depth, it still counts as divergent situations. Okay, I hope that I'll be able to see a situation like that to show you guys. So let us see. So we have this one here like so, and we have it like so. I hope you can see it now. It's so easy. I hope you can see that. Okay, now just by looking at these peaks here, you can see that we actually have a divergence situation here, and I'm going to use the indicator first and go to the chart. And if you look carefully, you can see that this point here is actually lower than here. Okay, so this is another incidence of divergence. Okay, so this is another incidence of the positive divergence here, and then an incidence of divergence here. So let me reiterate again. When you see divergence like so at the top of price going down, this is negative divergence. And when you see divergence like so pushing price up, this is called positive divergence. Okay, so while it's not so crucial that you know the names, I just want you to learn how to recognize divergence. And you can see that this being the monthly chart, we were able to spot divergence here. So imagine if you saw this divergence situation here on the monthly time frame, you could have made all this profit all the way to this point. and then the moment you saw this positive divergence situation, you would have made all this profit all the way to this point, all those years and years of profit. Okay, so this is divergence on the monthly time frame. So this occurs on all currency pairs, it occurs on all time. You don't have to worry about the fact that you did not see divergence on a particular time frame. It's always available on all time frames. So if we go down to the weekly chart now, this is the weekly chart, and just for the sake of diversity, let me switch to another currency pair here. So let's just choose the USD CHF because it's the first one on the list. And now I'm on the weekly chart of the USD CHF. So can you identify any divergence situation here with your eyes before I begin? So remember, if you are looking for negative divergence, the second peak has to be higher than the first peak, okay? And if you are looking for positive divergence, then the second peak has to be lower than the first peak. You understand? So now, if you are in a trend, like now, you can see here we're in a gradual and descending trend, okay, a downtrend. If you see divergence situations here, like here, or like here for instance, you will observe that the divergence situation may push the market up, but it is going to break the trend. It only pushes the market back up to where the trend is supposed to continue. So what I mean by that is, if we were to draw, say, let me just draw a rough trend line. This is a rough trend line, okay? So if I were to draw a rough trend line like this, okay, now carefully looking at all this, you will see we had a positive divergence situation here, right? Or let me just show you that. This is a positive divergence situation, okay? You can see that, right? You can see that even though it pushed the market up, the market had no option but to reverse again because the downward trend is strong. So when you are in a trending market, be aware that divergence situations can only push the market up to a certain level. It doesn't mean that the market is going to reverse. Divergence is most powerful at tops or at bottom situations, okay? So I want you to pay attention to that very carefully, because a lot of people, when I first learned divergence, usually I will enter a divergence situation like maybe at the bottom, like during a trend like this, and I will assume that it was going to reverse the trend and I will get stopped out, okay? So I had to learn the hard way by losing some money. So I'm trying to locate a very beautiful divergence situation for you guys here, and let me see here. Okay, we have one here, okay? This is the weekly time frame for the USD CHF. We have a divergence situation here like so, and you can see by using the stochastic indicator how easy it is to see divergence, okay? Now there's another one here like this, and if we go lower, you can see that by these peaks here you can see it. So already I hope that you guys are able to identify divergence situations. I'm going to skip the daily time frame. Let's go to the 4-hour chart and let's see if we can find them. Instantly I begin to see them, okay? So let's see, where will I go to find a good one for you guys? All right, let's see, they are all over the chart. I'm just looking for the ideal ones for you to see immediately. I'll make the chart bigger, and I'm going to switch back to MACD because I use MACD, okay? I primarily use MACD. I don't use stochastic, but I'm using stochastic to teach you guys how to locate these setups here, okay? So you can see that this is my default MACD, and I hope that you guys are able to see this. I'll just have to change some things. One moment here, let's just change this so that you guys can see. All right, it's clearer now, right? So let's look for incidences of negative divergence here again. Okay, we have an incidence of positive divergence here. You can see a low here going up here, and you can see, you will not really see it on the lines of MACD, but if you look at the histogram, you will see that we have a divergence situation, okay? So I find divergence without the indicators. I can see them without the indicators, but since you are starting out, you may want to use these indicators to help you to find them, and I hope that so far you are able to locate them. Now let's switch to another currency pair. Let's use the USD JPY here, and let me see. Okay, see an incidence of positive divergence here again from here to here. This is the 4-hour chart for the USD JPY, and you can see it so beautifully here on the MACD. Okay, so let's go back a ways. This is another incidence of positive divergence. You can see we have a low point here projecting to the back. We have a much higher low point, and look at MACD. Beautiful. This is divergence. Okay, this is positive divergence. Okay, now look up here. You notice that this point is higher than here. Okay, so if we were to draw a line across like so, and we go down to MACD, you will see that we can draw a line on top of the peak of MACD, and this is negative divergence, and you can see how it pushed the market down. So this tutorial is primarily to show you how to look for divergence. You already know how to find wave bottom situations, but I'm trying to show you that whenever you have an instance of divergence, usually there is going to be a wave bottom or a wave top situation there. All right, I hope that that was clear. Okay, so this is another incidence of positive divergence rather here, like so. And if we look down at MACD, you may not see it so prominently, but if I draw a line here, you can see that it pushed the price up. Okay, another incidence of divergence here from here to here. You look at this, you can see that this point here, I just have to make it. I don't know what's wrong with my trend line, but you understand what I'm trying to do. You notice that this point here is higher than here, and if we go down to MACD, you can see that if we look carefully at the peak of MACD, we have a gradual descending slope, and you can see that that is what has pushed the price down here, giving us another incidence of positive divergence. Okay, because positive divergence pushes the price up. And let us look at MACD. Beautiful. You can see MACD here. So sometimes when you look at your indicators might give you a flat valley situation or a peak. All right, so it still counts as divergence. It's just that it's not going to be as powerful as when the slope. This is another incidence of divergence. Just by looking at the slope of MACD, I can tell that this is a divergence situation, because if you look carefully at this point, you will see that we have a high point here, much higher than this high point. This is divergence. Okay, so I hope that that was clear to everyone, because once you recognize this, you cannot unsee it. You will begin to see it at every point in time. So I'm going to switch to another currency pair again. Let's use a weird currency pair like the let's just choose the GBP JPY, and I'm going to go to the 1-hour chart now. Okay, so let's see if we can find incidences of divergence. Instantly I see one here. You can see that this is a positive divergence situation, and look at MACD. It's trending in a very weird way. Okay, now this point here is not lower than here, but this valley here is lower than here, so we can actually use this one. Okay, and you can see that even though it's ever so gradual, it has pushed the price up, and you can see we actually had a wave bottom situation here. Look at another incidence here of negative divergence. Let's just draw the lines again, and if we look down here, you can see. Now let us see if this peak is higher. It is. Okay, so you can see that this is divergence and it pushed the price down, and I want you to notice that we had a wave top situation here. So whenever you see divergence, expect a wave top or a wave bottom. When you see that a positive divergence situation, expect a wave bottom situation. When you see negative divergence, expect a wave top situation. Okay, is that clear? Now this is another incidence of positive divergence here. You can see that after the positive divergence, we had a wave top situation pushing price up. We had a negative situation here, it got a wave top situation, pushed price down. We had a positive situation here, we got a wave bottom situation, pushed price up. We had a negative situation here, we got a wave top situation, most likely pushing price down. All right, I was very fast there, but I just wanted you people to see that this occurs almost all the time. So I'm just going to draw the line here, and let's see if you can see the gradual ascent of this slope here. So this is positive divergence. You see the beautiful wave bottom situation that occurred. Now look at this one. So this is negative divergence here. Excuse me. And you can see the gradual slope of MACD. Okay, now you don't need to draw the lines. You only draw the lines just to practice and to see it. Once you get used to seeing it, you don't need to draw the lines. Even if I were to remove the MACD indicator and the stochastic indicator, trust me, once you begin to see this, you can't unsee it. Okay, it becomes so easy for you to see. You begin to notice this, and it's so powerful. Okay, so this is it. So this is another incidence. There are so many incidences here, too numerous for me to possibly count. Now we don't have it on the slope here, but we have it on the histogram. Okay, so when you are using MACD, please pay attention to the histogram as well. Even if you do not see it on the slope, most likely you will see it on the histogram. And even if the MACD or your indicator does not properly show you the slopes and the valleys, as long as price is giving you higher highs or lower lows, you should be able to project how far or where price is going to go. All right, see another incidence here of positive divergence situation. Here we see it on the slope of the histogram, not the slope of the MACD line and trigger line. Okay, so there are so many instances here. Look at another incidence here. You see, this is negative divergence, and if we go down, we do not really see it on the slope per se, but I can still see it ever so slightly. All right, so this is another incidence here, and you can see after this incidence of positive divergence, you can see we had a wave bottom situation, and that pushed the market up. So the divergence is happening all the time on all time frames. This is the 1 hour chart. You can see another incidence of positive divergence here, and this has pushed the market up. Okay, so I hope that I'm going to stop here for now, but I hope that look, we have two incidents of positive divergence here back to back. Okay, so whenever you see divergence situations back to back, it's usually pretty powerful. Now this is on the 1 hour chart, so the moves might not be as impressive as you would think, but pretend that this was the weekly chart and you will see how many pips this would have gotten you. All right, so I hope that if you by watching this video more than once, you are probably going to get it. It's very easy. You don't need more than 1 or 2 days of practice to really get the hang of this, but I want you to track on your charts, starting from the monthly, the weekly, the daily, going down even as low as the 1 minute chart to locate divergence situations. Because once you know how to recognize them, look at another incidence here of negative divergence, and you can see we had a wave top situation or a 1, 2, 3 top situation pushing the price down. And for those of you who are good at counting waves, whenever you have a negative or a positive divergence situation, you can begin to count your Elliott waves, okay, bullish and bearish. So I'm going to stop there for now, and I had fun doing this, and I hope that you had fun watching as well. So I encourage you to go to your charts and begin to practice and find these divergence situations, okay? Something else I really should have said, and I'm sorry for not having said it earlier, but it's just as pertinent. Look for divergence situations at areas of support and resistance. Very, very important. So example, if I were to go to the weekly time frame here, just like I've been doing in my videos, say I were to let's just pretend okay, let's mark here as a level of support. Okay, so let's go down to the 4-hour chart now, and I want to show you something. Do you see here we have an incidence of positive divergence, and you see that this happened at an area of support. So what I want you to notice is that divergence situations occur a lot at areas of support and resistance as well. So as you put all these things together in your trading decisions, you will begin to see much more profitable trades. Okay, so profitable trading to everyone, and thank you for watching, thank you for listening, and I'll see you again. Bye for now.